All right, what's up, everybody? Cowboy. It is 8:30 AM EST on Thursday, May the 23rd, and today is Drips Day. So in the private live lab, we've got the Gorilla in today, and apparently he's got some pretty strong drips. Now, drips, just so you all know, out there in YouTube land and whatever else land, X land, Rumble land, in the private live lab on Thursdays, not every Thursday, but probably 3 to 5 Thursdays a month, or I should say 3 to 5 times a month, almost always on Thursday. V comes in and gives us information, right? It gives us some stuff from on high. Now, V the Gorilla does a lot of deals around the world, a lot of large gold and precious metals in general, and crypto deals, a lot of over-the-counter type stuff. And when you deal with the kind of people that he deals with, you get information as to what's going on at a high level. And so whatever he's allowed to share, because sometimes you're just not allowed to share stuff, but whatever he's allowed to share, he shares with us in Algo Factory first. And then maybe a few weeks later, it comes out on Rogue News. So if you are trading, of course, any kind of information like that is great for knowing which way the wind is blowing, and it's damn interesting as well. Okay, cool. So Bitcoin is continuing to do like we discussed, like my forecast from, gosh, almost half a month back now. Let me see, 13th. I made this on the 15th, so about a week back. This forecast is playing out very nicely. Let me go ahead and put it up on the screen here. And you can see Bitcoin getting ready, at least it looks like it's getting ready to pop right up out of this consolidation, right? This 2-3 month going back to early March, 10th March, more or less. Some people would say 4th March, some people would say later, but whatever the case is, price has been consolidating. Now, just a reminder to people who might be new to markets, the way that markets work, okay, in general, is you have consolidation and then you have breakouts. So you have price moving and then it kind of creates a bit of a range. It's not always this clean, but then it moves in another direction. Now it might go up, or it could consolidate and it could go down. And some of the best traders I know will trade these breakout moves, right? And this happens on a low time frame and it happens in a high time frame. It's like a fractal type thing. So let me show you on the charts. I've already done this. You can see I've put these large boxes here. So you have a price moves into a box, out of a box, into a box, out of a box. Even these little boxes right here. Now, if I were to zoom in, like on a lower time frame, you'll see the same thing. Watch this. Because that's on the daily. The chart that you're looking at, that is 18 hours for each one of those Japanese candlesticks. But let me go to the 30-minute chart, and this works on every single time frame. Okay, so for example, this being the 30-minute time frame, which is more of a day trader type time frame. This is like a time frame that people, they're maybe like myself, they actually trade all day long. You see price move into these boxes and then move out. And the opportunities happen during the breakouts. Some of these boxes are more obvious than others, right? Bitcoin is a tricky one, but you can identify these boxes. They're very identifiable, and there are actually tools, indicators, algorithmic tools that can help out with that as well. But this is fairly obvious right here. Fairly obvious. Now, this is Bitcoin. Bitcoin's a little bit messy. Bitcoin is very volatile. But if you could identify these, right? And when price breaks out, these are very obvious opportunities, especially if you can combine algorithms with them. Now, the longer the consolidation, the bigger the breakout. Okay. There are some exceptions to that, but for the most part, the longer the consolidation, the bigger the breakout. For example, if you take a look here, this is a fairly long consolidation compared to all the other consolidations on the board here. And you can see that the breakout happened much longer. And of course, there are consolidations inside of consolidations, so on and so forth. And we, if I were to zoom out, are in a massive consolidation going back for 2 months. So you see this big giant box. That is a giant consolidation. And inside of that, you'll see that there are little tiny ones here and then breakouts, right? I mean, you can find these everywhere. It's one of the most basic ways to trade is you look for consolidation breakouts. And Just so you understand, consolidations create a range. Ranges provide a wonderful opportunity to trade if you can identify them. And you'll notice that as I do these shows, I'm always identifying ranges. And in this case, this range is, if I zoom back out, fairly obvious. If you can identify an established range where it's bounced back and forth like 3 or 4 times, and you have the other tools to understand how ranges work, then you can actually just trade the top and bottom of the range, right? Now, there are circumstances where you'll see price dip out of that range and perhaps you lost that trade, but if it pops right back into the range, you can go ahead and win that again. So let's demonstrate this really quick. This is a great way to trade. This is a great methodology. If you know nothing else about trading, but you only have the basics, right? Then this is kind of a great place to start. So let's take a look at that. So price in this case, let me zoom in a little bit, make it a little easier for you all to see what's going on the screen as well. Okay. So as price moves in to the range, and then it needs to bounce back a few times before you realize it's a range, right? Now it's a range, right? So you could, as price moves up, you realize this is a range, and you can go ahead and put a long on right there. Shoot. Let's redo that. Sometimes these tools are very precise. Okay. So you know that it's a range at that point, and you can put a long on, right? You can just long the bottom of the range, and you have yourself a good 2 or 3 to 1. And then you take profit at the top, and then you short the top of the range. So price heads up. And again, it's a range. There are some there are some indicator type tools that can help you also identify whether there is a breakout. Just besides the price action alone, there are other tools. And then you see the top of that range, you can short that, right? And if you're playing the range, you can get some really good risk to reward on these. I mean, that's a 3.5 to 1, and that's if you have a stop loss way up here. Some people are a little bit tighter, but 3 to 1 is beautiful. You can lose more than half of those and still be profitable. And every time price makes this range, you can just simply long the bottom and short the top. And that's a 3.5 to 1. And as it bounces around, you just keep doing that. Now, eventually, you'll lose 1 or 2 trades. And the reason that would happen would be because price breaks outside of that range. For example, right here, where you had the price break to the downside a little bit deeper than the range, right? And that was a lost trade. But in that case, what can happen, and the way to make that money back is, first of all, you have really, I probably wouldn't have traded this. It wasn't an identified range by this point. But by here, you have 1, 2 winning trades that are 3 to 1, right? So just losing a 1 to 1 after winning 2 3 to 1s, you're fine. And then you can get back in once it pops back in and make another 3 to 1. So to imitate what's happened up above in our little example below, let me show you what this would have looked like and why it's still profitable to do this, even though you lost a trade. So you have price come here and then here, and it actually started over here. So it's a range by this point. So shorting this one, that's a win. Longing this one, that's at least a half a win. And then you might have lost this trade right here, but once it popped back in, you had another opportunity to win. So how is this profitable when you're losing a trade, right? Well, even if you're being conservative, and even though you mightn't have already known it's a range by this point, let's just say that you didn't play this range up until, say, like right here. You wanted to really make sure it's a range, and you're confident that it's a range right here. So on this one, you won a 3 to 1, right? And then as you went long on the bottom, you would have at least taken half the profit on that. It wouldn't have been a 3 to 1 here on this one. Let me zoom in. Okay. Because the way I do these, right, is if I'm going to play a range, I take half my profit off at midpoint. So it's not truly a 3 to 1, but you get a 1.3 to 1 plus a 3 to 1. So that's a 4.5 to 1. You divide that by 2. I believe that's the math. And you end up with like a 2 to 1, right? So you got a 2 to 1 here. You got a 1 to 1 right here, or better, And then, so now you're up to 2-to-1. So you're at a 3-to-1 right now. So for all the risk that you've put in, you've risked, let's just say these are $100 trades. You've risked $200 here. You've made 400. Now you're going to risk another 100, right? Because it's $100 per trade. And then maybe you lost this trade. Maybe you lost this one. So you won 200. Now you're down 100. You're still ahead 100. And then on this case, you went ahead once it got back in and you were confident, you went long here and you may have still made another 100, right? Now it would only be 1-to-1, but now you're up again $200. And then once it bounces back down, you take another long here and you add and you get another, basically a 2-to-1. So now you're up $300. So at this point, your one loss is covered by all the rest of these trades. Now, in this case, given the price action, given this head and shoulders, and given where we are in the market, I'm not shorting at this point, right? I'm actually pretty confident price is just going to continue up. It could grab some liquidity down low. There's always that chance that I could short at the top where it is right now, or at least I could have when it reached the top to go down to the midpoint. But given we're in a bull market with Bitcoin, that's where it helps to know your asset class, right? It's the bull market, or at least you're fairly confident that it's the bull market. And given that being the case, shorting Bitcoin is not something I generally do. I did short a few days ago and lost that trade. So it's definitely something that's a little highly risky in the bull. But this is how the range plays can be very, very profitable. And price can bounce around in a range for a long time. So, I mean, just an example of how profitable this could be. So it's not quite a range here. So you got 1, 2, 3, 4, 1 loss. So 3 wins, 2 losses. That's 2 wins. You still got 2 wins, and then a third win, right? So you got 3 wins total. You got, 5 wins and 2 losses. And even you can see these little boxes I drew right there. Those are all little miniature ones inside the 30-minute. So range, or like this range, was valuable for a long time. So range plays are great. And on top of that, you're combining range play with the breakout. So once price breaks out of the range, whatever that direction is, and especially if it's aided by algorithms, you can add to that trade. It can be tricky. We knew this was the ETF announcement right here, so I would not have necessarily long that. I actually called, if you go back to all the videos in December, I didn't know it was going to happen. I didn't know the ETF was going to happen in January, but I did call out that it was probably going to be a sell the news event. And sure enough, that's exactly what it was. So would I have longed this? No, I didn't. I knew it would head back down. And then the Gorilla called that it would bounce down here at 38,000 and continue up. He called that ahead of time. So between technical range plays, between breakout plays, and between talking with us and us giving you some ideas, not investment advice, but just some ideas on what's probably going to happen, this is how money is made in markets. And if you want to make money with us in markets, then come on over to algofactory.tech. That's algofactory.tech. You can zap that QR code on the top left-hand side or top right-hand side of the screen, and that is going to take you to the website. And we do help people build algorithms. We help them build trading methods, right? And when I say algorithm and trading method, I don't mean like you have to code. Just send a quick message here to V. You don't have to code. You don't have to know computer coding. Now, if you want to code, or if you do know how, we can help put you on the path to building an auto trader so that you can actually build something that trades for you when you're not at the computer. But even those start out generally as a manual method, right? So either way, whether you trade manually or whether you have a machine trade for you, we can help you build that methodology, and we can help you extract money from these markets. So come on over, and I'm going to leave you with the all famous, all too characteristic message here at the end. And we're going to jump to the private group. So thanks everybody for watching, and leave comments if you have questions. And if you're watching these shows, you can actually ask questions. I will do custom charting for you for these 10-minute live shows. We're here for you. Okay. All right. Here's the message.
Join us or die.
Just kidding, but it's funny.